The JSE looks set to open to mixed global markets this morning, with investors weighing some disappointing data out of China. There are also still questions about the future of U.S. monetary policy and the economic fallout from the Delta variant. Matete Thulare, head of foreign exchange execution at Rand Merchant Bank, joins us now to talk to us about the latest market-moving business news. Good morning to you, and thank you so much for your time. Let's start here. The Marikana massacre, 9 years on. Did the mining group involved share price reflect the devastation felt on the ground at all?
Good morning, and as you say, I think it's the beginning of the week, and I suppose also 9 years into all of this. And I think, if anything, the social unrest carries an economic cost, just not to the immediate price that's to be paid, to replace smashed windows or torched cars, or even the mining equipment that we saw back then. And obviously one way to measure all of this is how stock markets respond. And what we've seen obviously over the past couple of years, inclusive of what we saw in the beginning of July and also 9 years ago, is that social and labor unrest are often cited as key investor concerns in South Africa, and they've had a material impact at times on the mining sector in the past decade. We've seen the numerous times where there's been labor unrest on the back of wage negotiations, and this has seen even the likes of Lonmin, which was obviously reduced to a penny stock as it staggered to extinction. So on this day, South Africa is obviously commemorating the tragic events of 16th of August 2012. Obviously, that Marikana massacre influenced the labor relations in the country. And I think that's also given power to a lot of the minority trade unions. And I think also what we've also seen over the past 9 years is obviously what's playing out at this current point in time, where the boom in the commodity prices is obviously saving the South African economy from going bust. And I think a lot of mining companies are paying millions and billions in taxes, in company taxes, which may help pull South Africa from the fiscal cliff that we have been speaking about. And more importantly and more immediately is the tax windfall, which will obviously help the state with some of the state interventions to cushion the household and businesses from the worst of the pandemic and obviously the recent civil unrest.
Give us a sense then of how the markets opened this morning, particularly the rand. I mean, the currency lost a lot of ground amid a stronger US dollar last week.
Yeah, look, I think it's also been quite interesting for the rand. Obviously, it's had a really turbulent start to the month of August. It's not traditionally a good month for the rand, which is the month of August. And I think, if anything, at this point in time, over the past couple of weeks, we have seen that it's been a combination of what the U.S. Federal Reserve has been saying. We've seen what, the local unrest has unfortunately had a negative sentiment and obviously negative investor confidence in the rand. And obviously with the dovish, Reserve Bank locally, that doesn't look like they will be pulling the trigger with regards to interest rates anytime soon. On the back of that, we also had, really strong non-farm payroll numbers out in the U.S., which is obviously now, a lot of market talk is starting to, talk about potentially an increase in interest rates in the U.S. sooner rather than later. On the back of that, we have seen the rand, touch 14.99 just a week ago. This morning, we are about 20 cents stronger. But on the back of that, I think obviously we are still waiting for data, that's going to come out locally and globally. And a lot of market participants will be waiting to see how that actually plays out. But also, I think also with regards to the Delta variant, that we are seeing the numbers escalate in a few parts of the world. That's also going to be something that the markets are watching over and above the data. And I think this is something that, we are keeping track of. And I think one thing we have seen over the past 3 months is that the rand has unfortunately lost about 4% against the dollar. But nonetheless, that's not all doom and gloom. And I think if you think about it, just about, call it 2 months ago, we were at a strong point. We were around that 1340 level. But, I think in the last 3 months of the year that's left, there's a lot of event risk that is still coming about in the market. We do know that the ratings agencies are still going to give us, their decision in the next few months, especially with the new finance minister that's came in last week. We also know that, the 4th of November, we've got the medium-term budget statement from the new minister as well. Also, over and above that, there's also, the local central bank meetings and also the Federal Reserve meeting in the next month as well. So obviously markets will be looking out for a lot of those things over the next few months. And obviously this will give direction as to where the rand ends off for the year.
And interesting, especially because there's been such mixed reaction then to the appointment of the new finance minister. But let's move then to this. Sasol has released its full year results. The petrochemical company has faced a slew of challenges with poor investments. That's in its Lake Charles project. But Sasol has benefited then in 2021 from rising fuel prices and has also said its cost-cutting efforts have also paid off. Talk to us then about their numbers.
Quite an interesting set of results from Sasol. I think they've swung to a full year profit as we've seen the recovery in the crude oil and also chemical prices, further reinforcing the company's debt restructuring efforts. I mean, if you think about Sasol, they are the world's top manufacturer of motor fuel, which obviously they faced a heavy blow last year when the COVID-19 pandemic started, and that obviously saw fuel demand and prices fall off the cliff. Its share price tanked, and a lot of market participants wrote off the company, which obviously was struggling with a mountain of debt. And they've alluded the strong performance to strong cost, working capital, and obviously capital expenditure performance, despite the continued impacts of the COVID-19 pandemic and obviously the adverse weather events like you mentioned at Lake Charles. But obviously, nonetheless, they have decided not to declare a dividend in an effort to conserve cash, but said obviously the restoration of that dividend was a key priority. On the back of that, I think that's obviously quite a solid set of results that they have released.
And let's talk about Northam Platinum then. They've also released a trading statement for the year that ended in June. How has the group fared in the period under review?
So Northam, just like its peers, I think all the mining companies in South Africa, they are delivering a really solid set of financial results, obviously underpinned by production growth and obviously the commodity boom, which has seen an increase in the PGM commodity prices despite the backdrop of the ongoing global COVID-19 pandemic. They've also announced a major improvement in year-on-year annual profits following that increase in the average PGM basket price. As demonstrated by a lot of their peer group companies, Northam is likely to show the benefit of the high rhodium and palladium prices and also recovery in the platinum price. And this is despite a stronger rand against the dollar and obviously, also interrupted by the backdrop of COVID-19 in mining. Also, the other thing that was also interesting is that attention will also fall on plans for dividends as well as growth. I mean, the CEO already this morning, Paul Dunn, he's also said that he's quite bullish on the future of PGM prices for the next 10 years and has indicated that the company intends to increase production from the current goal of 1 million ounces a year. So that just shows you that there is a lot that's going on in the mining sector. I mean, we have seen the likes of, Harmony, Anglo, Northam, Goldfields, all releasing really solid results on the back of the increase in the PGM basket.
And BHP confirming that they initiated a strategic review of its petroleum business to reassess its position and long-term strategic fit then in the BHP portfolio. What is the significance of such a review?
So BHP, which obviously generates a bulk of its profits from iron ore and copper, has started reviewing its portfolio as obviously a lot of energy super majors around the world are starting to grapple with global pressure from investors and governments alike over climate action. And also in some cases, we've seen shrinking core production and adding renewable energy assets. So the group has said it is in talks over a potential merger of its oil and gas unit with a company called Woodside Petroleum to accelerate a retreat from fossil fuels amid increasing pressure to curb emissions. This has been obviously a big thing and a big theme, especially when it comes to the likes of ESG. So one of the options that has been discussed include a distribution of Woodside shares to BHP holders to allow the Australian energy firm to obviously add operations spanning from Australia to the Gulf of Mexico, because they have said that the petroleum division simply no longer fits within their BHP portfolio or their future-facing strategy. And I think for them, they've missed opportunities to actually sell some of the thermal coal assets at higher prices. So at this point in time, I think BHP actually should know that it's better to exit the petroleum industry sooner rather than later.
Interesting. Thank you so much for that, that analysis there, and really taking us through some of the significant moves of the rand, as we saw the currency losing a lot of ground amid a stronger US dollar last week. Thank you so much for your time. That was Matete Thulare, who's the head of foreign exchange execution at Rand Merchant Bank.